In the media, you often hear the narrative that if sterling weakens, that pushes up the FTSE 100, and the narrative's quite plausible. What they say is that there are lots of companies in the FTSE 100 which earn their earnings abroad. That means that when they convert that money back into sterling after it's weakened, it actually flatters the earnings. But is that really true? Well, let's take a look at the numbers. It turns out that it's complete nonsense. So let's see why the FTSE 100 is not correlated with sterling. First, let's look to see what correlation really means. Let's visualize movements in sterling with these red arrows. To simplify things, we'll just move up or down. So on this day, sterling moved up. And the FTSE moved up as well. And the next day, they both move up together again. Then they both fall together. You can see that they always move in the same direction. If that's the case, then the correlation would be +1. It would be perfect positive correlation. Now let's look at the other extreme. Sterling moves up again, but this time the FTSE moved down. The next day we get the same thing. Now sterling moves down and the FTSE moves up. You can see they're always moving in opposite directions. And this would be a correlation of -1, perfect negative correlation. And if it's just a hodgepodge of up and down moves, the correlation would be 0. So now let's look at the correlation of the FTSE with some currencies and some other assets. If we look at returns since 1984, what really jumps out is the correlation with DAX. But of course that makes perfect sense. We're a European country and 50% of our trade is with Europe. So whatever drives European indices will also drive the FTSE 100. That's why the correlation is about +0.7 with the DAX. And more generally, it's correlated with global indices. So the S&P 500 has a correlation that's a little bit less than +0.5, and so does the Dow Jones Index. The only currency pair which has a reasonable correlation with the FTSE is the Aussie dollar, and it's not with sterling, it's with US dollar. And the reason for that is that the FTSE is heavily dependent on commodities. It has a lot of mining stocks in the FTSE 100, and the Aussie dollar is strongly correlated with commodities, because its growth is heavily dependent on exports of those commodities. The FTSE also has a heavy weighting towards oil companies, which is why there's also a small positive correlation with oil. But what's the correlation between the FTSE 100 and sterling versus the US dollar? Actually, it's almost exactly 0. The same for gold, the same for Eurodollar. But maybe this was just a fluke. Maybe there really is a correlation between the FTSE 100 and sterling recently. So let's take a look at the correlations over time. So these are called rolling correlations. We slide a window over time and then we look at the correlation of the FTSE with various other assets. You can see the DAX correlation at the top is very strong and very consistent. But if we look at the correlation of the FTSE 100 with sterling versus the US dollar, there simply isn't a correlation there. Certainly not a stable correlation. And that correlation with the Aussie dollar versus the US dollar isn't stable either. But on the whole, it tends to be positive. Given the amount of trade we have with Europe, you might expect sterling versus the euro would be correlated with the FTSE 100. But there again, we see no steady correlation. So the next time you hear this in the media, bear in mind that it's complete bullshit. If you're also tired by hearing bullshit in the media, tell us about it. We'd love to share it with other people. You can tweet us at PensionCraft, message us on Facebook, and if you want to see more of these videos, subscribe to our YouTube channel.